All right there, ladies and gentlemen. All right, hello and welcome to Portfolio Cashflow on Friday, right, for $2,000 a month with I'm Possible Terence. Okay, now, so I hope all of you are well and let's begin our Friday session together. All right, now, so without further ado, okay, let me go through the details of how I run the session. If you're joining us for the first time over here, there is an admin matter I need you to get to. All right, please head over to streamyard.com/Facebook. All right, as you see on the banner, right, you'll be brought to a pop-up page and then you'll see a Facebook button. All right, I just want you to click on it. All right, and this will allow, right, the webinar, all right, I can say it, or the streaming software, right, to access your Facebook profile so that when you leave comments, right, we will actually know that it's you. All right, now, so for those of you who are already live with me, please leave a comment right now. Hello, Ryan. Hello, Alex. All right, and this is what I mean. All right, hello, Facebook user. All right, now, so if you have not clicked that button, all right, by going to the website, this is how we see you. All right, for all else, all right, like Ryan over here, this is how you see Ryan. We'll be able to know, right, that he's the one leaving a comment. All right, this is important, all right, when you ask us questions later on, all right, once I run into the session proper. All right, and the next thing over here is the standard disclaimer. All right, now, so I will be discussing live trades. I will be thinking and considering of putting on trades in my own personal live accounts, right, that I've been running live together with all of you for about the better of 4, all right? Is it 4? All right, let us do a check of it. Yes, we started in May. So May is month 1, month 2, month 3, right? We're coming close to the end of month 4, right? We're beginning, sorry, we're beginning month 5. All right, now. Whoa. All right, now, so we're running this together right now, and this is a live portfolio that we started afresh, right, after building one together for the last 1 year. So what's our goal? What's our aim again? Right, to find good portfolio put options to sell, right, in a very simple manner, right, just once a week every Friday, right, and aim to build a $2,000 cash flow on a consistent basis month to month. Yeah, okay. What's our portfolio size for this session? All right, for our session that we run every Friday, I'm building it based on a portfolio of $100,000. All right, now, so we are already up for the last 3 months. All right, we hit our targets. All right, 3 months in a row is 2,294. All right, 2,218, and then 2014. All right, so that has ramped up our portfolio to $106,500. All right, now, so we're up about what, 6.5% just 3 months in. All right, and we're going to log out month 4 today. All right, so we're going to log out month 4 today. And before I even start the session, as you see on the yellow box below, right, we are well over our target, ladies and gentlemen. All right, we are hitting, all right, to the tune of $3,458, right, as of right now. Okay, now, so that's a great deal over here. All right, so markets are good. It has helped many of our positions. We have reaped a better cash flow, right? But for the better of the last 3 months, right, we're still met our goal. All right, so we're going to build this no matter how it works. All right, we're going to keep it going. All right, now, so without further ado, all right, thank you once again for very much to join us, all right, in our Facebook Live session, right? And I aim and I seek to continue to deliver, all right, for all of your benefits, okay? All right, now, so yes, we do have a couple of Facebook users who are joining us, all right? So if you're first time with us over here, all right, please go over to streamyard.com, all right, /Facebook. I'll just put out the banner quickly one more time, all right, streamyard.com /Facebook, all right? And then in the pop-up page, click on the Facebook button, right, that will approve your profile so that when you leave comments later on, I will be able to, address you by name, okay? All right, let's get our session proper and started, all right? As I always do, okay, I will start the session by talking about the markets, all right, and how I see the markets and what do I expect out of it, all right? Now, so markets without, me mentioning it all, right, has been on a tear, all right? Now, on a tear, meaning it's been on a tear upwards, all right? Market has been relentless. All right, now, so yes, I did expect it to come off, right, but it didn't. Yeah, okay, so market just kept charging higher and higher and higher and higher. All right, okay, and all right, it seems like it's now ready to fizzle out. Why? Because this very, very steep uptrend line, okay, if I'm going to activate it, all right, and if I'm going to pull it higher, all right, this very steep uptrend line over here, all right, has been broken yesterday and then followed by today. All right, so if we continue to see more selling pressure, until the close of the market, right, there can be actually a real threat, right? And I would say this as well, right? If the market is capable of breaking 4,200 today, all right, all hells may break, all hells may actually break loose, and we may actually quickly see the next sell wave down. Right now, why do I say we'll see the next sell wave down? That's because, right, in the midst the last sell-off in the markets, right, there were a lot of people who were starting to fear a bigger sell-off, right? And then they started chasing because they don't want to miss out, right? But if there is a quick, swift sell-off this time, right, it may actually force these people to throw in the towel, all right, and call it quits, all right? And then, all right, at the end of that sell-off, right, we may actually get the market bottom. Right? I can't guarantee that, but that's the psychology, right, that can potentially play out. Right? So don't get yourself caught at this very moment, okay? All right, now I can only say this, and I can only, tell you in the best possible manner. All right, now, so if you have any trades, if you have any positions with stocks, all right, okay, now you should consider, all right, taking protective actions on it. All right, which means you should take some of your profits if you have any, right? Or you should consider hedging them, right, by buying put options to protect the stocks or something like that. All right, now you definitely need protection, right, at this point of time. All right, why? Because, right, market has been going higher and higher and higher and higher, right? But the surfacing of the threats of a higher interest rates are starting to come. Oh my goodness, are starting to come back up again. All right, so this is something you definitely have to pay attention to, and you need to be very, 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 very careful about. All right, now also the reason I say this is because, all right, when market has a great upswing like that, all right, the probability of your danger is actually on the downside. All right, now we have a situation where we may have limited upside, right, but a big severe downside. Let me have a sip of water. All right, now, so with that out of the way, all right, let's get to our trades today. All right, first we will start with our management of our portfolio, all right, and then we'll follow by, all right, any trade actions we will take, okay? All right, now, so I think this is a better way, all right, the portfolio at the top, all right, and then our trades at the bottom. Okay, all right, now, so let's go. All right, now, so we have ownership of a WBA stock, right, at the cost of $45, right? And obviously, all right, WBA has not gone anywhere, all right? So it's trading about $38, $40 today, all right? So there's no action required. So what we're going to do right now is we're going to cut this out, all right? And we're going to carry it forward, all right, into our next month's portfolio, all right? Okay, so we're going to move it forward into our next month portfolio, right? And we're going to continue owning the stock, right? So there's nothing to worry about. Now, the next one over here is that we have a 19 August 4250 put options, call options that's expiring on our Intel shares. All right, now, so where's Intel today? Let's have a look. Intel is trading at about $35. All right, so we are in good position, all right, for this call option. It's going to expire worthless today, all right, and that's going to bring us all of the $215 in cash flow. All right, so we did a good sell over here. It has helped to offset, right, the cost of us owning the shares. All right, so this is going to expire worthless today. All right, we're going to log in the $215 cash flow. All right, and all right, we're going to carry this stock position, all right, into the next month as well. All right, now, so the next one over here is GPS. All right, we have GPS ownership of stocks at $10 per share. All right, and we have also sold a $10 call option, all right, earlier this month. All right, or actually on July. We collected 34 cents for it. All right, now let's look at our GPS trade at the moment. GPS is trading at $10.18 today. Now, there's two scenarios that we can have. All right, now the first scenario, let me move it into screen so you can see. All right, now the first scenario is, right, that the stock will stay above $10. Now, so what's going to happen is, right, the exchange, right, is going to take away our shares. They're going to assign the call option, right, and our shares would disappear. Right, so this would mean, right, that I would actually record, right, our call options as worthless. All right, okay, our call options is worthless, right, and then our stock will be taken away from us, right, at this strike price, which is $10 as well. Right, so in that scenario, right, come next week, right, we will free up $5,000 in capital, right, that we can reutilize over here. Right, but if it doesn't happen, right, all we're going to do is we're going to carry forward our GPS stock position into the next month, which is September. Yeah, okay, so I can't confirm this at the moment, right? But one thing I can definitely do, right, is that, all right, we're definitely going to recognize, right, all of the $170 in cash flow, right, on the call option that we sold for GPS, right? All that is left is whether we're going to end up keeping the share, all right, or the shares will be taken from us, right, on Monday. Yeah, okay, that's left to be seen, right, on the market closing today. Right, so we leave that and we'll see where it brings us. Now, next trade over here is the ANF. Right, so we have an Abercrombie and Fitch 16 September $18 put option. All right, we collected $1.20 for that trade. Right, let's see where is ANF now. Right, so ANF is up and it's about $20.70. Right, let's see how much our put options is worth. Right, so we have a 16 September $18 put option. Right, it's worth about $1 right now. All right, $1 right now. So if we close it, there's not much profit to be looking at. So I'll continue to hold on to this position. All right, so no actions taken on this. All right, we'll hold it. All right, and after today, right, we will recognize, right, this half. Right, we'll recognize this half, right, of the cash flow, right, which is worth $300. Right, so if you look at my formula and calculation, right, there is actually a divide by 2 over here. Right, and the reason is, right, I sold 5 of these. I sold 5 of these put options, right, at $1.20. So the total cash flow that I collected should have been $600, right? But this trade was done in July, right, with a September expiry. So that will cross over into 2 months, right? So we are recognizing half of the cash flow in the month of August, right, and half of that cash flow in the month of September, right? So that's why you see $300 over here, right? And then you see another entry below, which is the same trade, ANF, for the other half of the $300. Okay, right? So we can recognize this $300 at the end of expiry today. All right, so that will be done. All right, so that's $300 in the bag as well. All right, now, so what's left is our VZ stock position. All right, and it costs us $50 to own the shares. All right, and we have no choice but to carry this forward as well. So this trade 24. All right, now, so why do we have no choice but to carry it forward? That's because VZ right now is trading at $44. Right, so nothing to be done because it's too far to sell call options to collect any premium as well. Right, so no actions as well. Right now, so we do have one last position, right, that we initiated on the month of August. Right, we sold the 16 September AT&T $18 put options for 40 cents. Right, where is it now? Let's have a look. All right, AT&T, right, 16 September, $18 put options is worth about 25 cents. Right, so we have about half of, almost close to half of the premiums. Right, so this trade is in a good position right now. Right now, with all that said, okay, with all the liquidations and all the expiries that are due today, all right, all the expiries that are due today. All right, now let me do this. All right, so this is going to clear. This is going to clear. All right, so Abercrombie and Fitch. There we go. Right now, our portfolio utilization has dropped to $76,000. Right, so ladies and gentlemen, all right, we are trading only $76,000 on our portfolio. That's about 75% exposure. Right, so I'm definitely looking to reallocate because for the month of September, right, I'm only collecting $500 right now. Right, so this is about the right time to start gearing up. Right, because we did exceptionally well. Right, we're going to clock in $3,458 for the month of August. All right, so a round of applause for everyone, all right, who has traded this, this month together with me, right? So that's some decent cash flow that we created, right? But we must move forward, all right, and start planning for the next month, all right? So since I've got some capital, and of course I need to do some catch up as well because the target is going to be $2,000, right? I'm actually going to allocate, all right? I'm actually going to allocate, and I did find something to allocate as well, all right? So let's move on to the trade position, shall we? All right, so let me bring this back up. All right, so we're back up over here. All right, and all right, one of the trade positions that I want to allocate into today, all right, is actually opening up the trade again. All right, and that's Kohl's. All right, okay, now, so why am I trading Kohl's? Simple, because Kohl's actually announced their earnings just yesterday. All right, and it was actually going up where we closed our trades and took our profits. Right, but the earnings was good if you look at it. Right, the earnings was better than estimates. Right, but they probably gave some warning going ahead. right? So the stock was being punished all over again, right? So this sell-off is actually giving me another opportunity, right, to take a second shot, right, at the same stock, right? Why? Because the fundamentals hasn't changed, right? The company is still making some decent cash flow. Look, right, the current estimates for this year is still $6, right? You have a $6 profiting stock, right, in a year, right, making $6 per share, trading at $60, right? So that literally gives you a PE ratio of close to 5. And that's not all, ladies and gentlemen, right? If you look at something very clearly that I'm going to highlight to you over here, right? This is called the book value per share, right? Now, this company is trading with a book value per share of $35, right? But the stock price right now is $30. What it's trying to tell you is that if you liquidate off this company today, right, it is worth $35 in dollar terms, right? The stock is actually trading cheaper, right, than what it's worth, right? So of course, I'm going to feel comfortable, right, making cash flow on this, right? Now, so in fact, right, I'm going to generate some good cash flow, right, by taking on, right, the $30 put option, right, which is where the stock is, right, in 1 month from now. All right, now, so this is going to pay me about what? $30 is going to pay me about 205. All right, let's see if we go all the way to October. $3. I think that's pretty good. Yeah, all right. Okay, if I can pocket $3, 290. Now, let's go with this one. All right, this one pays well. All right, so let's go with a $30 put option for September. All right, so I'm going to load that up. All right, I'm going to load up a 5 option contract. All right, so I'm going to load up a 5 option contract over here. So let me load it up. All right, all right, there you go. All right, got it done. Ooh, quantity wasn't done right. All right, let me load up another add-on to it. Ah, man, I got chomped off. Am I going to get it? Am I going to get it? Am I going to get it? No, you guys are running me off. Oh, man. Oh, well, I'm just going to take it. All right, now, so ladies and gentlemen, all right, now, so I miscalculated, all right, by misjudging my size. All right, now, so I've traded one over here. All right, let me just show you. I traded one of these put options for 207. All right, okay, 207. All right, and then I did the other 4 at 206. All right, so for the better of recording, I'm just going to put it at 206 then. Yeah, okay, because the majority quantity is done at 206. All right, now, so we did, all right, we did sell 5 of the KSS September 16, $30 puts, right, at a net, right, of 206 over here. So let's go ahead and record that. Oh, I happened to drag it over. All right, so let's continue to allocate. 28. We haven't been trading much if you look at it, all right? Just 28 trades over the span of 5 months. We're going into month 5 right now, all right? And we're still hitting our targets, 2,000 a month, all right? So this is going to be a $30 puts, all right? We did it today. Today is the 19th of August. All right, give me a minute. All right, now, so with that. All right, now, so let's see where we are. We collected 2.06. All right, now, so that's going to bring us $1,000 in cash flow. All right, that's a decent trade. All right, it's allowed me to hit my target. right? It only cost me $10,500, right, in terms of requirements. Is that correct? Let me just double check. All right, so yes, 5 times $30 and 70% of that. All right, 70% of that. Yep. All right, I think it's all good. All right, now, so we are now up to about $1,500. Right, and I'm gonna see. All right, okay, I want to see. I'm gonna see if I can go ahead. All right, give me a minute. All right. Let me see if there's something else that I can reallocate my capital into. All right, there is Campbell Soup. No, not Campbell Soup. No, that's not Campbell Soup. Tyson. Right? Yes, I'm looking to reallocate into Tyson food as well. All right. So the recent low is about $78. Right. So the stock is trading at 81. All right. So I think this will be a pretty decent one. All right. If we can go to 77.50. Yes, 77.50. All right. So let's net this up. All right. I'll take a 77.50 for about 150 for the month of October. All right. So I'll be happy to do that. Right, and for this, because it's a much more expensive stock, right, I'll probably just trade a 2 option contract on it. All right, I'll take a 2 option contract size. Okay, so give me a minute. This is gonna be the October expiry. All right, 77.50. All right, I'm gonna do 2 of that at 150. Is it gonna get me there? I'm in. All right, but my orders are not taken. All right, so we've got to wait for a little bit. No, Cecilia, I'm definitely not interested in CRM. Not at these kind of prices right now. All right, because if you look at CRM is still definitely a very, very expensive price tag. All right, which means if the market corrects off, right, it has a lot of room to fall back to the low over here of 150. All right, so it is not exactly a company, yeah, all right, that's making a huge loads of profit. Yeah, okay, all right, in terms of how much the stock costs. It trades at 180 times PE. So that's a very, very expensive valuation. All right, so I'll be very, very careful about that. All right, okay, now. So with almost the same premiums, all right, better to give TSN a miss. All right, now, Andy, you have to understand this. All right, what's happening with KSS is it's having an outsized premium right now because of the earnings gap down. Right, so you're being paid exceptionally well, right, because of that. Right, but when you build a portfolio, you must understand they're going to be the good ones, right, and they're going to be the normal looking ones. Right, and to achieve your $2,000 goal target, right, it's pretty much a mixture of everything. Yeah, okay, because KSS is a retail-based company, right? But TSN, right, is more like a food-related company. All right, so it diversifies the risk, right? And as long as you achieve the end goal of the target, right, you're there. All right, so it's about achieving a balance at the end of the day. It's not just about trading all those that only give you good premiums, because good premiums, right, there must be a reason behind it. Yeah, okay, there's always going to be a reason behind it. It doesn't just mean that if you're paid well, it's also going to be a good trade, right? You're paid well because you're assuming some form of kind of a risk, right? And TSN, right, probably is trying to signal to you, right, that these kind of risk, right, is not very high, right, when you're trading TSN. Is my order filled? No, it's not. Right, so it's still sitting in between there. All right, hang on for a minute. All right. Okay. My orders got done, all right, and I got it done, right, at 149. All right, so let me show all of you, ladies and gentlemen. All right, so the orders just got done. TSN over here, 77.50 puts for October. I sold 2 of them right, for 149, right, 149. All right, so let's go ahead and record this down and let's see where we're at. All right, so trade number 29. TSN. All right, so this will be October. So the expiry is 21st October. All right, so that's going to be a 77.50 puts. Right, we're trading it today, and I'm pocketing 149. Right, so this cash flow has to be divided by 2, right? Because it's going to pay us right in the month of two, September as well as the month of October. Right, so I'm also going to cut this out, copy this, sorry, right, and duplicate it right into the month of October. Right now, so with our additions into our portfolio today, right, we are now hitting right close enough right to 1,600. Right, let me drag it. Yeah, here we go. Right, 1,684. All right, so with about 3 more weeks to go, I think we are pretty decently positioned. Right, how much of our allocations are we at? Right, oh, we are at $108,000. Right, so we're slightly but we have our profits. So I think we are fully allocated once again. Right, so if we add up the cash flow that we made this month, 3,485. Right, how much is our portfolio worth? $109,000. Right, so based on our I am not. Yes, we're $97,700 because these two trade positions are exactly the same. Right, so it only requires one set of deposits. Right, and if our $5,000 frees up because the stock is taken away, right, then right we are allocated even lesser. Right, so for now, right, this is what I have. Right, and I'm not gonna go beyond that. Right, I'm not gonna go beyond this exposure. Right, come next week, right, we'll have a look at something else. All right, come next week, we'll have a look at something else. All right, so Jennifer is asking, all right, what about SCHN? All right, to be honest, I don't know what the stock is, but I have a look. One thing for sure that I'm not so interested is that the nature of the business, all right, is steel. All right, so it's more commodity related, which means when you trade these kind of counters at certain point of time, it may look undervalued, right? But being undervalued, right, may have a reason, right? When it comes to cyclical stocks, like right now, okay, I will not buy any housing stocks, even if they look really, really cheap, right? Let me give you an example, right? If we go to KB Homes, right, look, KB Homes is only trading at 4 times PE, but no way am I going to buy this stock. Why? Because real estate is cyclical, and right now interest rates are going up, right? And when interest rate goes up, home loans are more expensive. There are going to be more defaults, and first thing, home builders are going to sell less, right? So sometimes you must take into account the nature of how they run the business, right? Like, look, Tyson deals with food, right? Whether times are good, whether times are bad, right? Food has to be consumed, right? So that's something different, right? KSX, right? When people have money, right, they shop. When people don't have money, they technically still shop as well, right? In a certain manner, right? So KSS, right, to a certain term, right? If you look at KSS, one reason why I still like it, right, is the fact that it has managed to stay really, really consistent. Yeah, okay. Many people are saying, hey, departmental stores are left for dead, right? But this is one departmental store that shows you its strength, right? Because it came roaring back, right, after the COVID, right? Yes, COVID caused them to make a loss, right? But after that, it came roaring back, right? And this year is slated to deliver another $6 profit. So they probably got something right over here, right? And the book value make it very, very interesting for me, right? So Jennifer, all right, if it were me, right, I would give SCHN a miss. Okay, I would. Yeah, okay, all right. Now, because higher interest rates may result, all right, in commodity prices going down because builders are not going to build as much, demand is going to drop, or things like that. Yeah, I don't know, but I'm not familiar. All right, so I would really rather not trade the stock if it were me. Yeah, okay. All right, now, so I hope I help you over there. Yes, I'm still open for a couple of minutes. So if you have any questions that you want to throw out over here, right, please feel free to do so. Yes, indeed, right? But I would actually tell you that KSS, right, being able to find something like KSS is like a dime in a dozen, right? It's like finding a needle in a haystack, right? So if you're gonna, first, if you're gonna sell everything, right, on KSS in a portfolio just to hit your target, is not exactly safe and wise as well, right? And if you want to find all kinds of stocks that pay you this kind of situation and premiums, you're never going to find enough as well. So that's why I say you need diversification, right? It's not just about wanting what you want. It's about what the market is giving you and how to make the best out of what the market is giving you. And if you look at it at this moment, there are not many stocks that are still considered cheap after this run up, right? And those that are cheap, we are already holding positions on them, like VZ, like AT&T, right? Like Walgreen Boots, like Intel. We are already holding positions on them. So we can't double up, right? So I need to continue to seek out other stocks that are still attractive enough after this run up, right? And there are not many as well, right? So I have to allocate because I have a goal to meet, right? So that's how I want to show you, right, that no matter what market conditions, right, we're still capable, right, of using the simple strategy and simple approach to reach our goals. Yeah. All right. Okay. All right. Desmond, nothing about INTC. All right. We're just holding on to it. Yeah. Okay. We bought the stock at 45. I'm still holding on to it. All right. I basically believe that it's going to come back. Yeah. All right. Mike, no. I won't be touching Himax for a while. All right. Okay. Now, first things first over here, all right, is Himax. If you have not realized, right, it's a Taiwan company, right? And with all the tensions of what America has done to Taiwan right now, right, and triggering China, I'm not too keen on it. Right? I'd rather stay away from it right now, right? Because if they can't run their products out of the country, that's going to be a problem for them, right? Because I'm sure you heard the routes, right, by sea right now is being blocked, right? So their goods can't come out, right? So I definitely don't want to get anywhere close to a Taiwanese-based company right now. All right. Will you expect the market to correct down going forward? Yes, definitely. All right. Okay. Now, definitely. All right. But you must understand one thing. When we sell portfolio puts, that's precisely why I want to show you the strength of this particular portfolio when you know how to do it right. Right. Especially when you know how to play it only with the right kind of stocks. Look, many people get themselves killed in two possible manners. One, the bad choice of stocks that they work with together with the strategy that they're applying it on, right? Now, you're selling a put option, right? That means what you're trying to avoid is a downright crash on the stock, right? But what are we doing right now? If you look at the stocks right now, okay, I have a position of VZ, right? Where has VZ gone, right? This is a 6 months chart I'm showing you. VZ has fallen from 55 all the way down to 44. That's a massive drop. So if this were to happen, a big blue chip, right, in your particular stock market, right, will you consider this as an excessive sell-off? Right, I'm not saying it cannot go down further, right, but there will now be a limited downside, right, versus a better potential upside, as long as the company is still making money, right? So it's not just about the market itself, but it's about the individual stocks that you're playing on and how you are planning to make your money that makes your portfolio successful. Yeah. Okay. So Facebook user, I hope I've driven that in over here. Yeah. Okay. And if you can approve yourself and your profile, right, to streamyard.com/Facebook, it will help me a lot. Right. I can address you in person. Okay. But definitely, right, assignment is a risk, right? But we're not fearing that at all. Right. We've shown you over the months. All right. As you see over here, we've shown you. We are assigned WBA, we are assigned Intel, we are assigned Verizon, right? Earlier. Are we assigned anything else? No. No, right? All right. Oh, yes, GPS. We are assigned 4 stocks so far, right? But we have never blew our margins, right? We are well allocated, right? We never run out of cash. So if I have to own the stock, I own the stock because I believe in the strength that the stock can actually go back up. So I'm willing to hold on to it. And many of these stocks actually pay a healthy dividend, right? Now, if you look at WBA, if you look at Intel, if you look at Verizon, right, and GPS, let me show you the details right now. Right, if I keep Verizon, I actually pocket a 5.8% dividend return in 1 year. That's not too bad, right? If I hold on to Intel, I'm pocketing a 4% dividend return in 1 year. That's not too bad as well. If I hold on to AT&T, I make 6% just from my dividend payment alone, right? It's not that bad after all. Am I not right? In the last one, WBA, it's also 5%. I can't see a fault in that. So as long as these companies continue to make money, they are more than capable of meeting their dividend requirements. So no harm with that. Yeah. Okay. There's no perfect. You must understand one thing. There is never going to be a perfect market situation for you to make all the money. There has to be some kind of risk that you're assuming, right? And I'm happy with the risk that we have. And I do what? I maintain this portfolio once every week, right? In the presence of most of you, right? Okay, unless I have a scheduled clash, right? Otherwise, I'll do it live, right? This is for all of you to see and verify it for yourself, right? We had 3 difficult months, right? This was a good one, right? But a good one isn't exactly the best for us because it'll make finding trades a little bit more cumbersome, right? But there still is, right? I just showed you today, there still is. Yeah, it just makes it a little trickier, right? But you can still find them. Yeah. All right. Right, Desmond, right? You're holding on to a lot of TSM, right? Like I said over here, right? I've said it before. It's not exactly cheap, right? TSM wasn't exactly cheap, but many of you, you just love growth stocks. I can't stop you. I really can't. All right. So this was where I said, it leaves you in this uncomfortable situation right now, right? So what are you going to do, right? If the market falls off and if tension continues to rise, right? You are in that catch 50-50 right now, right? So that's where I keep saying, right? Selections of stocks are very, very important. And that's the first thing that we cover, right? Inside our mentorship programs. We direct you to the right stocks. We bring you to the right category of stocks to look at, right? So that you can build your portfolios, right? In a very, very safe environment. Right, so that's something that we definitely want to do. All right, Stanley, thank you very much. All right, thank you very much as well, Facebook user. All right, I hope you've got your great answer over there. All right, but yes, all right, for those of you who might be interested, right, this is definitely something that we cover, right, where we trade live together with our trading members on a week-to-week basis, right? And we do have a good news to share because right now we've onboarded our 3rd trading mentor, which means inside our community, all our members actually get to trade 3 live sessions every single week of the entire year, right? So that's like more than 150 live trading sessions for you to learn how to become a better informed investor and trader yourself, right? So nobody really comes close or match up to what we can offer, right? So learning is through doing, right? And the more you do it, the faster you learn. I hope you agree with that, all right? Now, so if you have any interest to further your skills, right, and develop further based on the concepts that we have taught you today, right, and understand how you can do this on a much smaller portfolio, right, then, right, do consider by sending an email, right, to my admin team over here. I'm putting that email address below. Yep. All right. Now, so with that, I'd like to thank all of you for joining me in this session. KTC. All right. No. All right. When I build a portfolio like this, all right, on Fridays, right, together with all of you, I have a long-term outlook. If I have a good profit, right, to take off the table before its earnings, like with KSS, it will make absolute sense to do so, right? But I will not get out of a trade because of earnings without a good reason, right? Why? Because when I enter the trade, I like the fundamental undervalued position. So I'm not going to get out just because of earnings. But if I can get out because there's earnings risk, and a profit that's good enough to take off, that's different, right? Different stakes over here. Okay, so KD, I'm definitely keeping my positions. All right. All right, so Christelle is asking, all right, Christelle, as a beginner, if you want to copy the trades, do I copy trade number 1? You can't, I'll leave it to you, all right, because this is, like I said, a public session, so you need to be aware of all the risk involved, right, before you copy or follow any of these trades over here. Right, so first you need to understand what we're doing. Second, you need to understand the risk involved in options. Right. Third, you need to have the capital allocations. So all this has to be done on your own due diligence. Yeah. All right. Otherwise, if you have the interest, do explore some of our mentorship programs available. Right. Then where we can educate you, all right, and hold you by the hands, right, and trade live with you, like I said earlier. All right. Thank you very much. Thank you, Susan. All right. Thank you, Mike. All right. And Andy, I'm not sure which one is it that you have, but our ANF expires only in September. All right, so that's not going to happen to us. All right, so Theo, just as a last parting shot over here, I have no interest, right, in storage companies. Right, I seriously don't. Yeah, okay, they are a thing of the past right now, and I really, really fear that everybody's going to clouds. Right, when is the last time you still buy a storage, a hard disk drive? Right, I can't remember. Right, because I have a cloud account right now, so everything is safe there. Right, it's much more accessible and it's actually safer as well. Right, to a certain extent, I won't have to fear losing all the data because the hard disk drive spoils up. Right, so I'm not going to put my money right on a product that I no longer buy myself. Right, so unfortunately, I don't. Yeah, right. It may look cheap, but I don't like it. Yeah, that's just me. All right. Thank you very much over here, ladies and gentlemen. Before you leave, please do me a favor. If you like the content, if you like what I'm doing over here every week with you on Fridays, please hit the like button on the Facebook over here and also hit the share button. You can do this on YouTube as well. All right. And for those of you who are watching me from Facebook, right, you would do me a great favor if you head over to our YouTube channel, right, and subscribe to it as well and get all the updates. Right now, so ladies and gentlemen, thank you very much. Please do this for me. Hit the like button, right, and also share it out to as many people as you can, right? And I'll see all of you next Friday again, right? Once again, we hit our fourth month target in a row, right? So we are 4 out of 4 at the moment, ladies and gentlemen, right? 4 out of 4, right? And we are 109, which means we made 9.9%, right, in a period of 4 months. That's really good, all right? Because our ultimate goal is 20% per annum. We are already halfway there, all right? So we are on course, ladies and gentlemen. Thank you very much, and I'll see all of you come next Friday. Enjoy your weekend, ladies and gentlemen. Bye-bye for now. This is Impossible Terence. See you soon.